Welcome back to Wall Street in Europe. Today we're diving into a big question. Can Fidelity keep its grip on America's investments? Fidelity is a giant in the asset management world, managing over $16 trillion. But with Vanguard, BlackRock, and the rise of passive investing, is their throne starting to shake? Let's break it down. Fidelity is a huge name, managing about $16.4 trillion in client assets, with roughly $6.4 trillion of that actively managed. Last year alone, they pulled in nearly $33 billion in revenue and attracted around $700 billion in new inflows. But the game is changing. With the rise of passive funds, lower fees, and new tech-savvy investors, Fidelity has to evolve to keep its leading position. So what challenges does Fidelity face? First, passive funds like those from Vanguard and BlackRock are growing fast and often have lower fees. Fidelity's average fee is about 0.43% annually, which is lower than the industry average. But many investors now expect even cheaper or zero-fee options. Plus, younger investors are turning to robo-advisors and digital platforms. So Fidelity needs to adapt to stay on top in this evolving landscape. So how is Fidelity responding to these challenges? Well, they're not sitting still. They're investing in digital platforms and expanding their range of ETFs to compete with the likes of Vanguard. They're also emphasizing their strengths in retirement accounts like 401ks, where they still hold a strong lead. In other words, Fidelity is evolving to stay relevant, lowering fees where needed, and betting on their reputation and wide product range. And why does this matter for everyday investors? Well, if Fidelity stays strong and competitive, it means more choice and potentially lower fees for all of us. It keeps the market balanced and prevents just one or two giants from controlling all the investments. But if they lose ground, we might see more consolidation and less competition. So watching how Fidelity adapts is really about watching how the whole investing landscape might change for regular people. We're flexible to bid any tone. So in the end, the question of whether Fidelity can keep its grip on the market's investments is really a question of how the industry evolves. Fidelity has the brand, the history, and a massive client base. But they'll need to keep innovating to stay ahead of the curve, especially as younger, tech-savvy investors look for new ways to manage their money. For all of us, that means more options and hopefully better investing experiences in the years to come. Thanks for watching Wall Street in Europe. Don't forget to like, subscribe, and hit the bell so you never miss out on the stories that shape the markets.